Welcome to this explainer. Today, we're diving into an absolutely fascinating market paradox. We're looking at HIMS and HERS Health, ticker symbol HIMS. We're going to decode exactly why a company boasting record-shattering revenue growth is somehow seeing its stock punished by investors. So if you love unraveling a good financial mystery, you're in exactly the right place.
Here's the situation that sets up this perfect financial puzzle. Just yesterday, the company dropped its Q2 2026 earnings, and on paper, it looked like an absolute dream scenario. They completely smashed revenue expectations, they raised their future guidance, and they showed really rapid subscriber growth. Yet somehow, the stock went down. So in this explainer, we're going to rely strictly on the data to figure out why the market reacted so negatively to what honestly looks at first glance like incredibly positive news.
Section 1. The Telehealth Subscription Engine. To understand the whiplash, we first need to look at what this digital-first health platform actually does. HIMS and HERS operates a subscription-based telehealth platform. Basically, they connect patients with healthcare providers for prescriptions and wellness products. Now, they originally launched with a very specific focus on stigmatized conditions, things like hair loss and sexual health. But over time, they've successfully expanded into these massive everyday health markets. We're talking weight loss, dermatology, and even mental health. That diversification is absolutely crucial to understanding their growth trajectory. Just to give you an idea of the sheer scale they've achieved, their subscriber base hit nearly 2.9 million in the second quarter of 2026. To put that into perspective, that's an impressive 19% increase year over year. So they aren't just holding on to customers, they're rapidly acquiring new ones at scale and building a massive, recurring revenue machine.
But here's the kicker. Not only are they adding all these users, they're actually making more money from each one of them. Monthly revenue per subscriber has climbed to $92. That is a 21% jump from the exact same quarter last year. More users paying higher monthly premiums. The core subscription engine is literally firing on all cylinders.
All right, Section 2, Q2 earnings and the paradox itself.
So, the top-line number is incredibly bullish. Revenue for the quarter hit $753.2 million. This completely crushed analyst estimates, which were sitting around $699 million. We're talking about a massive 38.2% year-over-year increase here. Honestly, any company growing revenue at nearly 40% at this scale is going to turn heads.
But right after that massive revenue beat, the other shoe dropped. The company reported a GAAP loss of negative 37 cents per share. This was a massive miss. The analyst consensus was expecting a much smaller 5-cent loss. So they missed earnings per share by 32 cents. And this is exactly where our paradox begins to take shape.
It really is a crazy case of investor whiplash. Just look at the good side. They raised their full-year guidance up to $3.3 billion, hit over $60 million in adjusted EBITDA, and are seeing massive international growth, like 17x growth through their Eucalyptus acquisition. But on the bad side, those deep unexpected losses, operating margins plummeting to negative 12.9%, and some massive one-time legal expenses. Ultimately, investors zeroed in on those storm clouds, dragging the stock down 1.5% right after the report to around $31.59.
Which brings us to Section 3, the FTC lawsuit threat.
As neutral observers of this whole situation, we absolutely have to talk about a major headwind that hit the company in late July. On July 29, 2026, the Federal Trade Commission, joined by Utah and California, officially sued HIMS and HERS over alleged privacy violations.
The FTC laid out 3 specific and honestly very serious allegations here. First, they claim the company shared sensitive health information with third-party ad platforms like Meta and Snap, despite their privacy promises. Second, they're alleging deceptive billing practices, basically claiming users were charged almost immediately after submitting intake forms, often before they even consulted a healthcare provider. And third, the FTC says the company makes it unreasonably difficult for customers to actually cancel their subscription.
Now, to be completely fair, HIMS and HERS has vehemently defended itself. They released a statement calling the claims baseless and referred to the whole lawsuit as just an effort to generate headlines. But as we look at the financial realities, the market knows that regardless of who eventually wins in court, this litigation process is going to be incredibly costly and a huge distraction for the company's leadership.
And, well, the market definitely reacted aggressively. The stock plunged 12% literally right after the news broke. Investors clearly recognized that if the company loses, they could be facing substantial fines and might be forced to make some pretty significant structural changes to their entire business and billing model.
Moving on to Section 4. What Wall Street thinks.
With record revenue clashing against legal jeopardy, there's deep uncertainty surrounding the company right now. Out of 16 analysts covering the stock, a massive majority, 11 of them, currently rated a hold. There are only 4 buys and 1 sell. Essentially, most of Wall Street is just sitting on their hands right now, waiting for the legal and profitability dust to settle before making a strong move in either direction.
When we look at price targets, the average sits at $31.43, which is essentially flat, right in line with the current trading price. But just look at the incredible spread here. The low target sits way down at $21, while the high target is all the way up at $60. That massive gap shows just how completely divided the experts are on what the future actually holds for this platform.
And these analysts are laser-focused on some very specific metrics to justify those targets. For example, Truist Securities is keeping a hold rating with a $27 target. They specifically pointed out that GLP-1 weight loss billings actually dipped 1% month over month in July, which is a stark contrast to the explosive 32% rise we saw back in June. On the flip side, Canaccord is way more optimistic. They have a buy rating with a $40 target, and they remain highly bullish on the international expansion and the integration of that Eucalyptus acquisition. They actually still predict the company will achieve profitability this year, despite those current Q2 losses.
Let's wrap it all up in Section 5, Weighing Risks and Opportunities.
So let's look at the bear case first, the risks. It centers heavily on that FTC lawsuit and the very real threat of massive financial penalties or forced business changes. Plus, profitability remains super elusive, as we saw with that wider-than-expected Q2 loss and negative 12.9% operating margin. Add in the intense competition in telehealth and a stock that's down 36% over the last 12 months, and you've definitely got a solid case for caution.
But then, the bull case is undeniably compelling. I mean, we are looking at near 40% revenue growth and 19% subscriber growth. Their international expansion through Eucalyptus is a total game changer, bringing in up to $500 million in recurring revenue. They're aggressively capturing market share in the booming GLP-1 weight loss space. And their 2030 targets? They are staggeringly ambitious, aiming for $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. That would more than double their current run rate.
Which leaves us with the ultimate question. HIMS and HERS presents a truly fascinating test of risk tolerance. You've got this seemingly unstoppable subscription engine adding users and raising prices, battling against severe legal hurdles and deep operational losses. You really have to ask yourself, is this unprecedented top-line revenue growth worth the heavy legal and profitability risks for your portfolio? Does the telehealth revolution outweigh the FTC threat? Well, we'll let you decide.